So as Peter Miller, the CEO and president of the Institutes, shared with us yesterday, the latest survey in global concern with 2,200 insurance executives with a single question: what keeps you up at night? The result was cybersecurity being the number one concern. And in order to address that concern, IIS is very pleased to have Peter Hacker to share with us his insights, being a cybersecurity expert. Now, Peter's surname does not imply he is actually a cyber hacker. Peter is, in fact, a co-founder of the Distinction Global Cyber Observatory, and the Distinction Global addresses unparalleled emerging cyber risks exposures. And he's been in the market for many years. He's spoken at the IIS events before. And prior to founding his firm, he's the Group Chief Innovation Officer of ED, which was previously known as Coopers Gay. And before that, he was the CEO for the Global Communications, Telecom, and Media practice for JLT. He has worked in London, New York, Singapore, Zurich, and really all over the world on cyber risks. Ladies and gentlemen, please welcome Peter Hacker.
Thank you, Raphael. Ladies and gentlemen, it is a true pleasure to be here with you this afternoon. Like Raphael indicated, yes, my name is Hacker, Peter Hacker. And it is not my nickname, it is my true name at the end of the day, just to make this very clear from the beginning. We heard yesterday that cybersecurity, particularly cybersecurity and cyber risk, is the top risk at the moment. Without any doubt, as you briefly will see, this is absolutely justified.
Hey, this is Rajiv in finance. Call me as soon as you get this. Something's up with my laptop. I can't.
Katie, are you on your way into the office? Something's going on with our file servers.
Karen in HR are...
Apparently, there's a malware attack targeting our main...
It's ransomware. They're holding us hostage.
We're locked out of everything. I can't even check my phone. What about the backup?
That will take days.
We need this fixed now. Pay it. We don't have a choice. We're reporting earnings in 2 hours.
But how do we know that
Just
they'll...
pay it.
Okay, it's done.
I have the decrypt key. Mark, we have a big problem. The ransomware was just to distract us. They got inside. They got everything. Customer data, financials, everything.
The ransomware attack has impacted everything from home sales to even water bills.
Their entire computer system worldwide is being held for ransom, for ransom, for ransom.
The philosopher Marshall McLuhan once said, with every new technology, the entire framework of a business or of an industry is changing. And it's not just the image or picture within the frame in itself. Ladies and gentlemen, over the next 15 minutes, I would like to tackle two major topics for you. On the one side, cybersecurity for you as corporates. And on the other side, you are reinsurers, insurers, P&C, and life at the end of the day, and offer cyber. The combination of both offers huge opportunities, but at the same token, unprecedented or unparalleled challenges. If we look at the agenda we're going through, I want to give you some background information about how boards do feel about cyber risks today, particular banks, particular insurance companies and reinsurance companies. I'll show you a heat map, how such an incident evolves over 2-3 days at the end of the day. And I'll talk about some trends we currently see on board level basis. In the next step, we will then talk about the risk in itself for you as insurers, reinsurers to transfer, and ultimately we'll talk about solutions. Who are the solutions? How can we create them? Let me start with where are we today as far as key industries are concerned? This particular slide refers to Asia and a particular focus on Singapore. Singapore itself is a very successful country. Its backbone is built around financial services, power and energy, in the form of critical infrastructure, telecommunication, healthcare, leisure, information technology. As you can see, these figures represent the developments of incidents, attacks in the first quarter 2019 versus Q1 2018. So where are these coming from? What are the major concerns boards currently do have, particularly in the insurance and reinsurance industry, when I talk to them? Fundamentally, 5 things. Number 1, distributed denial of service attacks. Today, we roughly have 15 billion Internet of Things devices. Over the next 13 years, this number will increase to 125 billion devices. This has numerous challenges. One of them, by all means, environmental challenges as well. The other one, security challenges. The third one, risk management and insurance challenges at the end of the day. The second key risk on board level currently being perceived, system compromises. I'm sure many of you have already had in the past situations where they got compromised. They got an email, a phishing email, for instances. The third topic, definitely ransom. Ransom, as we haven't heard before. Extortion towards a company. At a later stage, there's also data theft, there's intellectual property. Where are these coming from at the end of the day? Fundamentally, 5 actors. Number 1, criminals. Number 2, don't be surprised, state-sponsored activities. These very much depend on, obviously, on the country, on the one side, and in the industries which are represented in these ones. Number 3, very much from state-sponsored to criminals at the end of the day, to individuals in itself. Let's look at specifically an incident heat map. This particular incident heat map gives you an indication how a case we had in 2017 in May developed. WannaCry. I'm sure some of you remember this one. I'm sure you remember NotPetya, which just came a couple of months later in June 2017. Now, what we currently are doing, specifically for Singapore, and some of you might have heard about it, in November 2018, the Singapore government at the SRIC, Minister of Finance Heng, indicated specifically the development of the first world's cyber pool, insurance pool. We are in the stage where we're modeling at the moment the potential economic loss based on a scenario of 3 components. One is denial of service attack distributed. The second one is ransom attack. The third one is wiper. In other words, a combination of NotPetya and Petya, but with denial of service attack. So we're going beyond what the PRA actually does in London. The results of this report will be published at the end of July. The first indication I can give you, it's going to be likely we're seeing a potential insurance loss in the area of $40 billion and a potential economic loss in excess of $200 billion. These are huge numbers. 40 billion, that's a mid-sized hurricane at the moment, ladies and gentlemen, in the US. So what are really cyber exposures for the insurance industry, for underwriters in particular, when we talk about it? I often been told by corporates and by boards they don't understand cyber when they talk about insurance. They don't understand it easily. Let me explain it to you briefly the way I see it. I call this hacker's house. Hacking is like breaking into a house. You break through a roof, you use an information communication system You do this wrongfully, you do it either maliciously, or you do it non-maliciously, and most important, you are trying to interrupt or disrupt someone's systems at the end of the day. The consequences out of this are either a house burns down, you lose data, you lose revenue, or the regulator comes to you and wants an investigation at the end of the day, or a competitor wants a liability. That's cyber. 3 things: malicious, non-malicious, wrongful, always the use specific of an IT system, and at the end, financial losses. What are the challenges we currently see in the industry from a regulatory point of view? Currently, we have many regulators who are concerned about the topic cyber risk. I mentioned the MAS here specifically, but in addition to the MAS, you obviously have the EIOPA, the European Insurance Operation Pension Operation. You have the prudential regulation. They want to understand from the insurance industry, what is the particular expectation they have to identify, quantify underwriting cyber risk. Ladies and gentlemen, this is a challenge. You know, why is this a challenge? Because quite simply, over the last couple of years, insurance policies have broadened. But technology, digitalization, has gone ahead rapidly as well. So we are in a situation where we're trying to catch up. We're trying to catch up legally, by regulatory, with a risk which for a long time might already be in contracts and covered, but unintentionally covered. Now the fundamental challenge for you as underwriters when it comes down to try to assess cyber risks. I'm afraid the cybersecurity industry and the insurance industry speak a totally different language. You could ask them, how is the weather outside? They will say it's 9 o'clock in the morning. Why is that the case? When you talk to about cybersecurity specialist, vendor, and you talk to them about frequency, they understand something else on frequency than you might. When you talk about, in cybersecurity, about a vector, different strategy, how you attack, for instance, is in a denial of service attack, insurers don't understand that language. So fundamentally, the number one challenge is really understanding each other. The second one is the data quality. There's a lot of people out there at the moment who see data as the new gold, who see insurers want to offer cyber insurance. Some of them do it very successful, like AIG, for instance, like CHOP, like Axis, for instance, as well. But there are many who struggle. There are many who struggle affirmatively to do that. Instant modeling capabilities. Without any doubt, cyber modeling today is at least 20 years behind NatCat modeling. At least 20 years behind NatCat modeling. Why is this the case? We don't have any clusters. We talk about incidents. We don't have any damage ratios in the form of, we know when we have storm, there might be a damage in a certain area. We don't have that in cyber at the end of the day. This is a big, big challenge. And the biggest one at the moment, aggregation. Ladies and gentlemen, there is no model out there right now which has not been developed by the reinsurance industry by itself, which is really fitting the purpose. The models which are out there by vendors in general, they're very much focusing on direct insurance. They're not talking about the reinsurance industry. And you probably recognize that changed the title to reinsurer because the buck stops with the reinsurance industry. You don't get diversification, particularly for this risk. At the moment, the last resort is the reinsurance industry. Wording challenges, just a couple of them. I won't go into cases which are pending right now, but fundamentally 4 things. Can we really put on paper what you want to cover? Yes or no? Will the language hold in courts? Example. Last week, the international Underwriting Association came out with 2 new clauses, 009/81 and 82. What are these? One is a total cyber exclusion, and the other one is a direct cyber exclusion. Problem is, courts don't always differentiate between direct and non-direct. The other one is definitions, wordings. War. What is war? What is cyber warfare? What is terrorism? What is cyber terrorism? In some areas, not even the United Nations have come to an agreement. And last but not least, is data a physical asset, yes or no? I leave this one in the room. I'm sure over the next 12 months we get some court judgments as these questions are concerned. Don't start before you can run if you want to underwrite cyber. Because, as I said before, there is a lot of exposure already in the books. And people need to understand these exposures. The regulators are interested not about whether this is silent or affirmative cyber. They want to understand what the exposure on cyber is. But in order to do that, you need to look into it and assess it qualitatively. Assess wording one by one. And ultimately, yes, you might be able to use the buzzword, artificial intelligence, but it's a long way until you assess the contract that detailed on artificial intelligence. Then you go into the affirmative side, where you really cover malicious acts at the end of the, it's maliciously driven. Now, this seems to be a lot of problem. Not really only. There seems to be very good solutions out there with what I want to conclude. There is no company big enough today to handle cyber by itself. No market. Doesn't matter of the size of the reinsurer, direct insurer. It needs the alignment of cybersecurity industry with governments, with the reinsurance industry, and with the capital markets industry. Ultimately, the solution for this risk in the long term, ladies and gentlemen, will be the capital market. There is a long way to go to get there. There are various challenges which we will talk about on the panel later on. But at the end of the day, what's happening, what the Singapore government has announced last November is the right way to go. The industry needs to work closer together to make sure whatever data we have is correct. Whatever data we use helps us to run and price the risk, appropriately align capital, and ultimately transfer it into the capital markets. With that, I'd like to close my short keynote to you. It's a pleasure. I'm sure we'll discuss many of these aspects in more detail. But think about it, it needs this combination. I call it the troika of the cyber risk industry. Thank you very much.